Hello, I'm Andrew Inglis, and today we'll be reviewing the High Street retail investment for Q4 2014, together with a summary of the year and looking forward to 2015. A brief summary of the last quarter, Q4 2014. We tracked 49 deals, which totaled £356 million. This excludes a portfolio, Central London and auction transactions. This was a just under 10% increase on the previous quarter, Q3 2014. 2014 as a year, in summary, was one of steady growth. We saw transactions of 1.72 billion, which is 6.4% up on 2013. Just to give you a comparison, 2012 was 1.07 billion, so steady increases all along. I think this fairly reflects the improving sentiment of the market, the challenges for the high street, and also improving retailer sentiment. The last quarter has seen funds dominate. They accounted for over 70% of all acquisitions in Q4, principally down to a couple of larger deals, which I'll touch upon later. The private investor has also been active, but because of the fund's dominance, their percentage for this quarter has been diminished. The last quarter, the figures have been slightly distorted because of several large transactions, several of which have been undertaken off-market. There was the purchase by Aviva from BP Pension Fund of a large prime retail block in York, the Spurriergate in York, which they purchased for £36 million, showing a net initial yield of 4%. In addition, off-market, British Land sold to Legal & General the large House of Fraser department store in Birmingham. This was part of a three-property portfolio, but the high street element effectively was the House of Fraser, and that was transacted at over £70 million, 6.8%. And lastly, DTZ investors, on behalf of Strathclyde Pension Fund, purchased a large multi-let block of retail and residential in Clapham, London, for over £41.5 million, which showed a net initial of 3.5% against very fierce competition. There are a number of factors that will affect the high street retail investment sector for 2015. Demand for prime shops remains very high. Demand for secondary and tertiary retail is improving. The occupational market is likewise improving. This will help the market as a whole. There are several unknowns which are difficult to predict, and it'll be interesting to see how they pan out in 2015. The first is the UK elections. Next will be the effect of the European economy and the euro on our economy. The fact that funds who own large sectors of the prime high street are not releasing their product, that will limit activity, and therefore, unless that changes, and I see no reason for that to change, we predict a very steady 2015.